Hey everyone, thank you so much for joining the Behind Company Lines podcast. Today we have Manning Field, CEO of Follow, a B2C retail investing marketplace that connects influencers with people who automatically want to follow their money moves. Manning, I'm so excited to chat with you and not only learn about you as a founder and kind of share your experience with the audience, but also what you're building at Follow and the interesting kind of and really the change in where we get information, who we get information from, and how we continue to foster that information kind of ecosystem or funnel so that we're making moves and kind of this whole transition outside of kind of traditional, whether it's institutional or traditional means of getting information or action items for individuals, especially on the financial side, into kind of more of a peer-to-peer connection, kind of like a social proofing in an accelerated form. So I'm interested to hear your thoughts on that in terms of what you're building. But before we get into Follow, what were you doing before you started the company?
I was working at another startup that was helping people save and invest. I was the CEO of a company called Acorns, and I spent 6 years of my life helping scale that business and working with that team to help as many Americans save and invest as possible.
It's so crazy thinking about Acorns because I'm a big fan of the product and I've used similar products, Acorns included in like Digit and all these kind of micro saving tools. And it's interesting just to touch on it a little bit in terms of like financial aptitude of a lot of consumers. There's a little bit of a disconnect between the little things that they can do to really prepare themselves versus all the information about big market money moves and kind of like lottery style betting and things like that. But describe a little bit about what is the change in behavior of people and how kind of products like Acorn and Follow kind of help impact not only what they know, but the moves that they can make that are reasonable and within reach for a lot of consumers and kind of the average individual who wants to be a little bit more financially competent and take kind of positive actions. Describe kind of when did the behaviors change and how are institutions like Acorn and Follow helping with those smaller behaviors that help impact somebody's financial future?
Yeah, well, I would say the lack of financial education and ultimately, which leads to a lack of confidence in an individual, has been an ever-present problem. We have 41 states in the country that don't have, that as part of their secondary curriculum, have no financial literacy in that curriculum whatsoever. And so you either are learning from parents or people in your life or from oftentimes in your own young adulthood, the mistakes that you make along the way. And so that has been ever present. I think with what I would call the rise of consumer fintech 1.0, which really kind of started just about 10 years ago, is what the power of the iPhone and the power of the app ecosystem, the ability to get to reach and distribution and reach people in a way in which they couldn't have been reached before, really started to make it very, very easy to help people to understand how to take a positive action to help themselves with improving their financial life. And so the combination of social media and that app ecosystem and the distribution that smartphones give you really is what drove, what I think is a meaningful societal change and people trying to do the right thing for themselves.
Yeah.
And so that combined with just, I would say, more of a willingness from a younger cohort to actually experiment in that way. To bank or to trade on your phone is, for someone who's been doing that for a long time, is probably counterintuitive. But for a young person, that seems very natural.
Yeah, and describe kind of the how Acorn in particular, in that past experience, and maybe even with Follow, how you've kind of really decreased the barrier to entry in a lot of ways for people to start using these applications or this consumer fintech, and also the trust building component, because as you said, it's a big transition from how people were investing or saving money into this super easy, almost too easy to use kind of ecosystem. Describe that a little bit.
Yeah, I mean, I would say, and I'm going to just generalize it a little bit more because Acorns has obviously been very successful, but I think there's been a lot of established kind of track records from companies like Robinhood, Acorns, Chime, and others that have just really made it very simple. And it's just the act of getting started is the hardest step to take. And a lot of those companies did a fantastic job of making it very easy to make that first step. And the successful B2C fintech players and all those companies that are listed are on that list, or because they made it very, very easy. And obviously they did a bunch of other things right along the way too. But the first step is like, hey, I download this app. What do I do? How do I get started? Usually there's a fair amount of combination of fear and excitement from the user as they go through that journey. And how do you make it simple? How do you build confidence? You're asking for my social security number. You're asking me to link my bank. Oh my gosh, that feels really scary. So how do you do that And what you find is just using kind of very clear language and be very clear about what your protections are as a consumer and why you use information. That usually helps people get across to the finish line and start. Ultimately, the goal is to get them to do the right thing for themselves.
Yeah, yeah. And what in particular, you're working at Acorn, you're still in this company, you're involved in a few different other startups as a consultant and things like that. What inspired you to go into the direction of Follow and start something that isn't really? I'll let you describe the company and what it does, because I think it's super cool. But what was necessary for your company to really get started, as it's not a traditional way that people say get information or reach followers and kind of have this whole ecosystem. Describe the inspiration behind Follow and what particularly was the necessary formula to actually get a company like that going, being that it's there's no real incumbent before it.
Yeah, well, I would say if you zoom out a little bit, the idea of social investing has existed for decades.
Yeah.
I mean, I think you go back to the rise of retail investing. It really comes to the 80s and dinner table conversations and locker room conversations about like, hey, what are you doing with your money? Are you buying this? Are you buying that? And
Right.
I'm sure you had like moments in '97 when the market crashed and so forth. But that kind of idea of discussions around what are you investing in? What are you doing? And that being much more retail driven as opposed to institutional has been around for a while. Now, no one's captured that digitally in a way in which that allows the benefit and what I've learned through my career is like the power of behavioral economics and automation. No one's been able to create a platform to deliver that automatically. There's been many companies that have been very successful or have done great jobs building community in social communications. Companies like StockTwit is a great example that's been around for a while.
Yeah.
And they built a really nice community around that. But the ability to have that community help drive the actual investment and what we like to say at Follow is follow the money, like is driven through the innovation that we've created through our investment advisor and the ability to automate that kind of magically behind the scenes. And what I've learned in my experience is the more that you automate things for people, they oftentimes will be much more successful in making the right decisions for themselves because you take emotion and you take decision fatigue out of the way. And if you study at Richard Thaler and Kahneman and Shlomo Bernardsky and all of those behavioral economics experts, what they'll tell you is most people don't operate in their own financial best interest. And so how can you use technology, brand, and reinforcement to help people make better decisions for themselves, which in some cases means giving themselves out of the way. And that's where our engagement comes from.
Yeah. How do people act in a way that is not of their financial interests? And is that necessarily because, and what do you think, if you were to speculate or if you have reasons, what are the reasons that they don't do that?
So there's many drivers behind it, but the best, and this is a well-researched, and there's been lots of papers out there on the internet and that has been published in academic journals around the best example is actually people who sign up for a 401k through their employer. And the opt-in rates in America versus if you make the 401k when you sign up at a new employer, you're filling out all your health insurance stuff and all the other enrollment things that you do. Typically, that's when you enroll with 401k. The opt-in rate is in the mid-30s.
Yeah.
Even with like an employer doing a match, and it's just like it's like stupidly low. Right?
Yeah.
When essentially you're getting no financial advisor, and I am also a financial advisor. No financial advisor would ever tell you not to do that.
Yeah.
But most people don't do that.
Yeah.
Likely because they don't understand it's embedded and nested in a whole bunch of other decisions, and it just and then they never go back and revisit it. And so the long-term effects of that is like a whole bunch of people missed out on the opportunity to get the benefit of compound interest over a long period of time that was free. And that's just objectively dumb.
Yeah.
And that's the way people get in their own way. But they've studied this in the UK, and actually there's some changes here coming in the US around this, is like making it opt out versus opt in. When you make it opt out, the adoption rate is in some cases above 90%.
Wow.
And so you think about like the societal impact of that decision, that one single decision could be really meaningful about how the quality of living and essentially tax policy and all of these other things down the road for decades.
Yeah. And describe a little bit more about Follow and what the user experience is and who are the consumers that our audience might not know of and kind of how everything kind of works.
Yeah. So really Follow was inspired by me and my co-founders, but just looking at the rise of the voice of the social media influencer, Some of my co-founders are quite young, and so they're actually in that cohort. I have the benefit of living with 5 teenagers between me and my girlfriend. And so I see the way in which they interact with the world and what motivates them to make a positive change in their life, or maybe even just cook a good meal for us.
Yeah.
And it's coming from these platforms and these voices that we would call non-traditional.
Yeah.
And so what I was inspired by was the quality of the takes and the quality of the ideas and the spirit of the community within these influencers. Listen, there's a whole spectrum here. So not everything's quality, but we choose to work with quality influencers, and people have good takes and diverse perspectives. And what I wanted to do is be able to connect automatically those voices and those ideas and their money ones automatically to help as many people as possible to follow them, and creating kind of a very natural social media interaction today, which is to follow somebody. So it's not only can you follow them, you can follow their ideas on our platform, but how can you also ultimately, can you just follow their money?
Yeah.
And that is the core insight that we had. And that's the platform that we've built. And now the way in which you do this is pretty challenging, because you start very first, and this is what we did, like understanding the regulatory environment and building a compliant solution, which is quite challenging. And this is why this has never been done this way before, because the barrier to entry and the creativity and the proactivity you need to have with the SEC in order to get this in a good place is actually a pretty meaningful hurdle.
Yeah. And a few questions come to mind, but first is what caused the shift from non-traditional kind of, I would say, pools of information or advice or things like that into almost like a social proofing model with a lot of different people on these platforms, giving advice, giving their insights, and people really kind of leaning towards trusting those voices a little bit more? What caused that shift, and why do you think it's so impactful to have that kind of ecosystem where we're taking the action suggested by somebody who's either similar to us or for in one of many ways, whether it's gender, age, or ethnicity, or what have you? There's so many reasons, background, whatever. What caused that shift in behavior and that shift towards social proof?
Yeah, well, you know what? I think there's a couple of kind of converging trend lines that's happening. So I'm not sure there's one single particular driver. There's probably a few flashpoints that we can point at, but what you see is just the rise and the trust of social networks. And as much as the trust has been challenged through the years, and particularly on the cycle, that trust in those networks is actually higher, and the trust in more likely the people in your own social graph is higher than trusted institutions. And actually, if you look at trusted institutions, that includes government and financial institutions, there is a long downward trend over decades that trust is continuing to erode. And so this convergence of my own kind of trust network and the lack of reliability of the institutional trust network has kind of risen to, and it's exploded in moments like obviously the Reddit Wall Street bets and GameStop kind of short squeeze that happened a couple of years ago. It was just a manifestation of these trend lines coming together. Crypto, on some level, you could argue, and I'm not a crypto zealot myself, but I understand and respect that community. But crypto is a reflection of that as well, even though there's some misplaced activity in some cases there, best well documented. But all of this is a broader conversation around where does trust lie? Because to make the financial system work, it's completely dependent upon trust. I mean, just look at what happened to Silicon Valley Bank. Like that's a 100% like erosion of trust in minutes. That fell to an institution that was pretty well run. They made a couple of mistakes.
Yeah. And describe a little bit more about the vetting process. I'm sure a lot of consumers are wondering about these, you call them finfluencers, which I thought was hilarious, but so true. I don't think I would have coined a different term for that. But describe the vetting process for these influencers, knowing that there's been even recent cases of bad actors in the financial influencing ecosystem that has really kind of divided a lot of people, whether or not to believe in those who are promoting a certain type of action or activity or strategy versus not. Yeah, describe that vetting process.
Well, listen, bad actors exist everywhere. You could see Bernie Madoff, who was on CNBC every single day for a long time until he was behind bars. So I think bad actors exist everywhere. But the process that we use is to first, we want to make sure that these folks have quality takes. And so we study their social media history. We make sure that they're not kind of talking about reckless behavior. They're not like saying things like get 300% returns and doing things that just frankly are not only illegal, but also just irresponsible, because this is not about getting short-term gains. This is about long-term behavior change for our customer. And so we look at there. Then if we feel like they've got quality takes and they've got a good audience, we look for people who have some type of a follow. And then what we do is we reach out to them, and we usually reach out to them through social media, and we participate in a lot of activities, things like Twitter Spaces and Instagram Live. And that's how we reach a lot of these influencers themselves. Yeah. And if they're interested on joining our platform, what we do is we then do a background check. Then we look at their trading history. So to make sure the things that they talked about on their social takes are actually showing things that they do in their own brokerage accounts, just to make sure that they're likely not full of shit.
Yeah.
And then we go through kind of a process where we actually have them trade on our platform before we expose it to any of their followers or our customers for 30 days. And just to make sure they continue to monitor activities. Now, there's a few other things that we do around ethics and training and monitoring. So they have to continue to submit what we're saying to make sure that they're not doing anything untoward. We also restrict certain activities. So not every stock that's available on any exchanges, things like kind of what they call pink sheets. So these are really like low price, low market cap, high volatility, low liquidity stocks. That's where a lot of the bad behavior and some of the recent kind of action by the SEC has been. Like, we don't even offer those. Those are not even tradable within our platform. Wow. We also don't do any pattern day trading, and so we restrict that. We do no leverage as far as no options and no margin. So we try to be pretty responsible as far as the types of trading activity we allow. And so what that actually does on the quality side of things is it becomes a positive selection bias on who chooses to work on the platform. So the kind of the people on the margin and the people that are a little bit shady, they look at this and are like, wait a second, I'm not gonna be able to do all the tricks that I like to do. And we're like, yes, you're not gonna be able to do that here, and we would encourage you not to do that anywhere, but we're definitely not gonna do that here. Yeah. And they usually have a tendency to drop out of our funnel.
Yeah. And I was gonna ask kind of the follow-up here is why move to a platform like Follow if I'm already, say, a successful influencer, I've got a large following, I've got a lot of traction, I'm doing all this trading. What's my motivation to move to a platform like this from your perspective and from their perspective, where the benefits lie? And obviously, I think we can all kind of speculate, but I'm curious to hear your opinion on that.
Yeah. Well, there's a couple. First is we give them the ability to monetize their audience in a way that they're not monetizing today. So we charge a subscription fee, which we share with this influencer. So, and we bill on a monthly basis. And so we give them essentially a recurring revenue stream, which most influencers do not have with any of their current models, unless they're just doing newsletters on Substack. So that's one benefit. The second one is, we serve as a point of validation, right? There's a lot of Photoshop happening in Twitter and Reddit threads about, here's my portfolio. Well, actually, no, we'll show you their holdings. We'll show you their performance. And so there's sort of validation and almost like the good housekeeping seal of approval that this is a legitimate position. These are legitimate trades. So there's this point of validation. I think the other part, which is really fascinating as we got into understanding the platform and the community that we're building for, is actually one of the things that is most frustrating to an influencer when they say, hey, I think Meta's a good buy right now because they've done all the cost stuff and all of these things. And I just wish the people who follow me would take advantage of that information.
Yeah.
And because there's a fairly large gap by a lot of the behavioral economic learnings that I've said, a very large gap between intention and action. And what our technology provides for one of these influencers is just they want their fans to benefit from their insights.
Yeah.
And because they're saying to them themselves, this is what they're doing for their own money. And we can prove that they're doing it for their own money. And they want people to benefit from those insights. And if there's learnings too, they want them to get the benefit of that learning.
Yeah. And I'm so curious, being that a lot of the compliance around offering financial advice, you have to have that fiduciary responsibility. And how have you incorporated kind of that either philosophy or kind of, responsibilities to Follow with people who may not come from a traditional background that where they had to go through training and actually achieve that fiduciary kind of license? How have you incorporated that into Follow? And what are ways that as consumers, we can kind of trust that they're acting in that best influence? Obviously, you have all these different measures, but that's something that's almost like the gold standard for getting any financial advice is making sure that responsibility, that fiduciary responsibility is kind of there and standardized. How have you kind of incorporated that into the platform and allowed people to have that trust?
Yeah, no, it's a fantastic question. And I think as I was sharing a little bit earlier, I mean, we started with that question, the regulatory side of things, which is rooted in your fiduciary responsibility to look after the client's financial interests. And so what I want to make clear is on our platform, you should think about us as two separate entities and separate experiences. We are a publishing platform, which is where all these influencers exist. And think about that as essentially as an analogy as a Substack. And then we have our investment advisor, which is owned by us and run by us. And that's where all of the execution, automation, and financial advice exists. So an influencer is not an advisor. And that's very, very important to understand that. They have good takes, they have positions, they are not managing your money, they are managing their own money. And they're sharing that. And when I subscribe to an influencer on our platform, I'm subscribing to just their ideas. What happens behind the scenes is the influencer shares their trading data with us. They give us real-time access to their trading data. What we do inside of our financial advisor is we construct portfolios that mimic their trading activity. And then if I choose to, as a customer, sign up for the investment side of what we do, I become an advisory client. And that's when our fiduciary responsibility. So we serve as the fiduciary.
Yeah.
And so these portfolios that they have, we manage, and we do things like suitability. We do things like understanding, obviously, your income, your risk appetite, your time horizon, all of those things that that advisor does in a responsible way. When you're out of sync with someone who you might want to follow, we let you know that. We give the opportunity to maybe redirect who you might want to follow, and we educate.
Yeah.
So our job is to make sure that we serve as the fiduciary. The influencer is not fiduciary. They are not a financial advisor. They're not managed that way. They're not paid that way. And what we are is it's basically this platform that connects these two things together. We serve as the fiduciary, and any of the things that would would be potentially viewed as not in financial best interest, we take on that liability. We take that very seriously. And that's what our technology does to make sure that we align people with the right financial advice and, more importantly, the right actions in their own investment account.
Yeah, it's incredible to see how you built into this one platform, essentially all the actions that we would take outside of this platform, which are we see whether it's a portfolio you want to invest in, and then we go on to TikTok and all these other platforms to really kind of validate that, versus now it's in one location and really kind of standardizes this ecosystem of research, which is you have an idea, you have some kind of investment that you want to make, whether it came from an influencer or you want to validate it with, then you kind of have this ecosystem and really speed the process. And how have you seen kind of the time from intent to action decrease for a lot of your consumers in comparison to, I guess, overall kind of behavior?
Yeah. Well, listen, I want to couch this with the fact that our app's been out there for 8 weeks. So there's not a huge data set to go interrogate and answer that question deeply. I can just tell you from my experience, it's really important. And I think what's also important, just given where the markets are right now and given where the markets have been for the last year, I would say 3 years ago, this was a slightly different kind of problem that young people had when they started to participate in retail trading. And that's when the markets were all up and lots of government stimulus around, and people were buying a bunch of tech stocks and buying a bunch of crypto, and everything was up and to the right. But listen, if you built a portfolio of Tesla and Bitcoin 2 years ago, right now you're down 46, 47%. And so when it was easy, you could trust yourself. Yeah. Because you had no real market insight and you're just riding the wave. And that felt great. But when it comes down to things are a little bit more unpredictable, a little bit more choppy, and it requires maybe a bit more of a sound strategy about how to think about your investments, what people look to is those people in their lives to help them navigate when they don't know what to do themselves. And that's the core insight behind the platform that we built. And that's why we work really hard to find a diverse set of takes and ideas to help make sure that we can represent all of the needs that someone might have when they think about what it is that they want to do.
Yeah.
And that's why we will continue to try to recruit as many voices that are diverse in not only investment service style, but diverse from every way in which you want to use that word to represent essentially the individual Americans out there and the young people today, which are much more interested in that particular part of this idea than frankly older generations are.
Yeah. Yeah. And describe, and I know the product was launched 8 weeks ago, but describe a little bit more or share with the audience the traction you've seen thus far and what particularly exciting about that momentum that you're seeing throughout this year and what your plans are?
Yeah. So we've got over 25 influencers on our platform already. And since we've launched, we've recruited about another 40.
Wow.
And we're doing a couple a day now. As far in our process, it takes a little bit to go through all the vetting that we do.
Sure.
But you'll continue to see more traction on what we call like the supply side of the marketplace. And we're not spending a whole bunch of money in marketing. So if you hear this podcast, we understand that, but not spending a whole bunch of money in marketing to really just get the product right and get the relationships right. And we're really excited about the reception, particularly how the influencer community has embraced us. And we're looking to kind of find our way and get some traction with the consumer over the course of the next 12 months. So as you just see lots of product improvements, experimentation, and all the things that one does. We're not really using capital and platforms like paid social media and so forth to drive customer acquisition, because that environment has been tough over the last couple of years. And frankly, we are really trying to build this thing as organically as possible.
Yeah. It's also smart that you kind of set up the incentive structure, being that if you like a certain influencer, you pay for a subscription, almost kind of continually feeding this positive kind of loop of information, rather than say pay for some information that don't necessarily have any ties to retention or anything like that, or part of trading, which de-incentivizes them in making the right bets versus just a lot of different ones and getting a lot of people involved in them. It's such a smart way to kind of create the subscription model for individuals who are continuously feeding all this brilliant information for them to continue. I'm curious whether it's external or internal, however you see it. What are some of the biggest risks that your company faces today?
Well, I mean, listen, being a venture-backed startup, it's more challenging today than it has been in quite some time, as far as raising capital and B2C fintech in particular has taken some shots to the face. So what one could argue is the best time ever to build a B2C fintech. I like that version of the story. But I would say the venture environment and the funding environment is very challenging for everybody.
Yeah. If everything goes well, what's the long-term vision?
Well, the long-term vision of the product is, I believe very deeply that portfolios of the future are portfolios of people.
Yeah.
And so I will have, my portfolio will be, I'll have probably a tech person, a crypto person, a real estate person, an international person, and a bond person. And my allocation between those people of my money and my investments is going to be informed by my risk appetite and it's going to happen on our platform. And I feel, where we think about this idea of social investing is many of my friends and family, because of what I do, are just interested in what I'm doing, and then maybe they're just going to follow me. And so imagine as a platform, I might have an underlying set of people I follow. Right. Some people just might follow.
Yeah.
And so this kind of what I call like inception level layer of a social network of people following each other.
Yeah.
That's what I believe the future is. And that's what we're building towards.
It's amazing. I always like this next section. I call my founder FAQs. So I'm going to hit you with rapid fire questions and we'll see where we get. So just to open it up, first question is, what's particularly hard about your job?
It's just the sheer diversity of any given mode. The amount of context switching you have to do in any given day is kind of head spinning.
Yeah. Yeah. And I know obviously there's a lot of information or a lot of news around, say, TikTok, for instance. People have been flooding to that platform to really get a lot of information on all facets of life. And especially recently, it's been popularized on finance. And obviously there's there's this pending doom that TikTok will be canceled and people will no longer be able to get information from it, which creates a whole different kind of ecosystem. But how does that change your company, your business? Do you see a lot of opportunity and a lot of these influencers kind of flooding to follow? Or do you see kind of something auxiliary kind of coming up and creating a whole new ecosystem with all that news, not kind of TikTok being no longer a place where people can get that information? How do you kind of see the changes that will happen in that environment affect your business?
Gosh, I mean, I'm not smart enough to predict exactly what's going to happen, but what I know is going to happen, either it's going to exist and thrive, or it's going to go away and something's going to stand in its place.
Sure.
I'm not sure we're the platform to do that because we're not really designed to be that broad reach. We're very focused on financial services, but I'm an optimist, and I believe that any time you've seen actions taken like this, that like innovation and opportunities have been created, and I'm excited to see how the world responds. And I'm not cheering one way or the other. I do think that there's valid points from both sides.
Yeah.
And I do think it's very, very important, though, that there's not an overreach here.
Yeah. I'm curious, what made you so confident in doubling down, on this whole finfluencer concept, being that a lot of people think it was a fad initially and people would go back to traditional ways of researching and gathering information. But I mean, I have my own opinions on it, but I'm curious to hear what was what made you double down on this whole concept of using social proof and using others kind of non-traditional means to get information. What made you so confident in that bet?
Math. Just look at how many people do it. If you look at the reach, there's more people that follow influencers than watch the Succession show on HBO. So like, it's just math.
Yeah. Yeah. Being that you've been a part of scaling startups and obviously this is a new journey that you're on, but what in particular in your experience are the components, if you were to look at a startup as a little machine, you look into the box and see the components of it, what makes a successful startup run and scale in a very healthy, positive way versus say the old model of startups, which was earn a lot of money, burn it, raise, and going through this roller coaster. Whereas a lot of companies now are very much focused on kind of sustainable operate, but even sometimes lean and bootstrap startups. What makes a successful company scale well?
I mean, my belief is really two things. Number one, you need to have a culture that is very performance based.
Yeah,
and hold everybody to a very high standard of performance looks like, and make hard decisions when things aren't going the way they need them to go. The second one is to really do everything you can, and this is a big part of what my job is to avoid distraction risk.
Yeah,
There's lots of things you can chase, and on a small team in limited capital environment, like you really kind of, if you lose cycles, like that's pretty devastating because those valuable assets we waste our time.
Yeah. Yeah. What's something you know now as a founder that you wish you knew earlier on?
You know what? I wish I knew we could work this way in a distributed fashion earlier on, because I would have gotten access to a much broader set of talent in my career, because I used to be so, call it radius based in talent acquisition.
Yeah. Yeah. It's fascinating to see the kind of whole shift into globalized talent really kind of come to the forefront. And obviously that's because of the aid of a lot of different technologies that create such a seamless experience. But yeah, a lot of founders echo the same thing in terms of the increased talent pool. So it's awesome to see that.
Well, I think it's trauma of COVID.
Yeah.
I mean, it took trauma of COVID to convince everybody, especially old people like me, that this is a good way to work.
Yeah. Yeah, exactly. Another thing is what's something you spend a lot of time on that you would like to spend less on, and something you spend little time on that you would like to allocate more to?
So I would like to spend less time on administrative tasks.
Yeah.
This is where my hope, where the progress we're making in AI can really help.
Yeah.
And then the second one is related to that same topic is like, I like everybody else am just fascinated with kind of AGI and where the world is going there. And I feel, especially as I get more and more removed from the youngest generation, like to deeply understand this topic and how to apply it to my own personal life as well as what it is that we're trying to do here at home.
Yeah. Yeah. It's incredible the amount of ways AI can be used and even integrated in technology to, whether it's decrease mundane tasks or operate efficiently or find all these new creative ways to connect consumers and your product. I always like to ask this next question because I love how founders extract information over any bit of knowledge that they ingest. Whether it's early in your career or now, what books or people have influenced you the most?
So I've been a voracious reader since I've been reading like a book a week since I was over 10 years old. So his history books are the ones that inspire me the most. And I was particularly just given all the activity in Ukraine, just going back and rereading a lot of the history books of World War I and World War II. It's just like the amount of pattern recognition that you can gather from reading history is incredibly valuable. And so I have a tendency to focus there, and I have a tendency to not really care too much about business books.
Yeah. I love asking that question because, there's a few different camps, but I love the founders who extract information from whether it's historical references or even fiction to really kind of extract or get away from the day-to-day tasks. And I think it offers a different level of whether it's refreshing or re-energizing or even just context switching for the sake of improving your performance in what your domain is. So I love asking that question because it's fascinating to see what people come up with. But last little bit, I know we're come to the close of the show here, and I want to make sure we didn't leave anything on the table before we give you a chance to give us all your plugs and all your links and everything like that. Is there any question I didn't ask you that I should have, or that you would have liked to answer? Anything that we left on the table here?
No, I mean, listen, I appreciate the way in which you interact with the world, and this was fun. So
amazing. I appreciate that, Manning. And I'm so excited to share this with my audience. So please tell us, where can we find you? Where can we support? Follow? Where can we follow? Give us your websites, give us your LinkedIn's, give us your Twitters. Where can we get involved and be a supporter of you and your company?
Sure. Our website is www.follow.co, not .com, because that was significantly more expensive. Our Twitter handle is, it's @followinvest. And in the app stores, we are Follow Invest. If you just type in, you can find us. It's a nice little purple F icon. And my Twitter is @ManningField. And please check us out, give us feedback, help make us better, and support the young people around you by encouraging them to take a positive step in their financial future. It doesn't have to be with us. It could be with anybody, but please just get them to get started.
Amazing, Manning. It's so exciting, not only learning and sharing your experience as a founder, but also what Follow is doing and how you're kind of really capitalizing on a lot of different ways that people are shifting their behavior to extract information, to make the action that they really are anxious to do, but traditional means of information really hasn't been doing it. But having that social proof, having people to trust and make that a platform to really facilitate these actions is so exciting to see what the potential future could be. So thank you so much for being on the show. I really appreciate you sharing. I hope you enjoyed yourself. And again, thanks for being on Behind Company Lives.
Thank you, Julian. Appreciate it.